Do you know what insurance is? If not, insurance is a coverage by a contract that guarantees payment if an insured loss occurs. So, why do people use insurance? They use it to be protected of possible risks, accidents, or losses. Then, what are the types of insurances? Automobile insurance is used to protect your car in case of a crash or accident. If you own a car, it might be useful to get this type of insurance. On the other hand, health insurance is used for when you have an accident or get sick. The insurance company might be able to cover your costs and even your own medicine. Homeowners insurance is used to protect your house and the things inside your house. If someone were to rob your house, you would get your money's worth of the stolen object. It would be useful to have this insurance if you do own a house. Then there's life insurance. It's useful if the highest paid member of your family were to die. In this, the company would give your family a certain amount of money to cover the costs. Lastly, there's disability insurance. It's used for when a person has or gets a disability. If you have a disability, you are protected and the company might be able to pay for most of your treatments and medicine. So, how can a person think of ways to not afford any losses? What many people don't know is that there are many different ways to diminish your chances of getting these losses. One is to avoid risk. You risk losing money by playing the lottery. Avoid it by not playing the lottery. The second one is to reduce risk. For example, you risk the chance of losing money if you participate in a bet. So, you can reduce the risk by not betting a lot of money. Then there's a third one, to retain risk. You accept the risk of losing money if you invested in a stock when you don't know the uncertainty of the market. What people don't know is that they can also transfer the risk. For example, you risk embarrassing yourself if you give a presentation in front of the entire school. You transfer the risk by asking someone else to give the presentation. Lastly, a person could share a risk. For example, you risk making an unpopular choice of dinner with your family. You share the risk and ask your family members what they want for dinner as a committee. So, even after all of this, so what if a person doesn't want to get insurance and wants to buy something else with that money? Then, this is what is called opportunity cost. If you don't want to pay for the insurance, you could use that money to pay for something else. This money could go towards getting those new concert tickets. It could also go to that favorite sweater you've always wanted to buy. Also, it could go to that donut you've been craving for weeks. If you don't already have insurance, you should get it. It's a great way to ensure that you will be protected from any type of risk, accident, or loss. Make sure you know the insurance you chose is right for you. Get insured now.